Hello and welcome to Lecture 12 of the Fiat Standard online course. Today's lecture's topic is the Fiat Standard's Cost-Benefit Analysis. So, since Bitcoin came about, I'm sure you've heard a lot of articles in the media and in the press and out in universities talking about the enormous cost of Bitcoin. Bitcoin consumes so much energy. Bitcoin spends and wastes so much energy. Bitcoin consumes more energy than Portugal. Bitcoin consumes as much electricity as Finland or something like that. Ireland is another one that has come up. This is roughly kind of where Bitcoin's energy consumption lies, it seems. And media articles are always making this into some kind of calamity that, oh no, Bitcoin is spending a lot of electricity and this is somehow a bad thing, that, you know, clearly there's no benefit there for Bitcoin to be wasting all of that electricity on. It's just internet nerd money. And we have all these perfectly good central bank currencies. So why would anybody want to waste resources on fiat? Well, in this book, we've spent quite a bit of time looking at the fiat currency and the fiat monetary system. And so we've seen how it functions and how it works. And now we look at its costs and its benefits. Let's see, how much does it cost us to have this kind of monetary system? So if we're looking at the cost of Bitcoin in terms of electricity, what is the cost of fiat? So in this chapter, in chapter 12 of the Fiat Standard, we've now had a century of the Fiat Standard since 1914. We've had 50 years since it's taken its final form. It's now possible to assess the fiat system and how it's functioning. A century is good enough to be able to pass judgment on it. That's, the generations, there's about 4 generations that have come and gone, 5 generations in a century. This is, I think, sufficient of a time to write a customer review, to take stock of how this thing functions. So what have been the costs and the benefits? So to begin with, what are the benefits of installing a fiat monetary system? Let's think back to chapter 2. What were the benefits there in economic terms? The benefits really is that it reduces the cost of sending gold around the world. That's basically it. So once we make central bank clearance, predominantly in terms of credit, and once central banks function with government credit as their primary monetary medium, then they just need to send telegrams or faxes or emails or Swift wires or all kinds of data, essentially, and money moves around. So there's no actual physical money that needs to be moved around. There's no physical gold that needs to be lugged around. All you need to do is just move the information, which is much cheaper and much faster. So this is, in a sense, the main engineering advantage of the fiat monetary system. You save on having to move gold around. In the 19th century, the US, when it traded with Europe, there were ships full of gold that would travel in both directions, taking gold from one place to the other, to clear trade between those continents and countries. And in many cases, some of that gold would drown, and it was expensive and it was insecure, and pirates could attack. So it's a significant cost. So we think about the cost of it. I try and estimate what this cost would be. And it's difficult to think because, we don't have very reliable data perhaps on, how much globally gold, how much gold moved around at that time, and how much today gold would be moving around, what the cost of moving it would be. We're dealing with hypotheticals here. But given what we know about moving gold around right now, I'm trying to estimate using a kind of generous upper value to, rig the contest in favor of fiat by trying to take the highest possible estimate and see what we could get to. And so I thought, something between 0.05% to 0.5% of gold's face value could be for transaction fees for shipping gold around. So you could imagine that, the face value of the gold would be moving around the world, and we'd have something like whatever value moves, whatever face value of gold moves around, 0.5% of that is the cost of moving it around. If we take that as an estimate, what is that in terms of global wealth? We could estimate it's if we take that to be 1/10 of global wealth, if we take the value of the gold that moves around, in other words, the total transaction value in the gold economy, if we take that in nominal terms to be 1/10 of the world's wealth, then 0.5% of that becomes 0.05% of the world's wealth per year. So I think as a kind of generous upper estimate, you could say 0.05% of world wealth per year was spent on moving gold around. This is likely a generous kind of upper limit because, ultimately, I think less than 1/10 of the world's gold will move around because most of the gold will just be settled between entities that settle between themselves. So I think 1/10 of the world's wealth being moved around is likely, I think, significant higher bound. Significantly higher bound. I don't think we'd be close to that. We'd probably be a lot less than that. And so the face value of the transaction fee would be about 0.05 to 0.5% of the gold. So 0.05% of world wealth per year is the maximum amount that you could get from, I would say, the cost of running a gold standard. So Fiat saves that. So Fiat gives us a bonus of 0.05% increase in world wealth per year, which seems like a good deal until you look at the costs. So what are the costs of running a Fiat standard? So to begin with, in this chapter, I think of all of the actual costs of running Fiat, the Fiat infrastructure in terms of banks and central banks and ATMs and all of that stuff. You could give that a value of 0. You could approximate that to 0 because it is effectively an insignificant rounding error compared to the real costs of running a fiat monetary system that result from the problems of running the monetary system. In other words, the cost of sniffing glue is not the price of glue. It's the brain damage that comes from sniffing glue. So when we're thinking about the damages of sniffing glue, we're not going to count that you're going to lose $3 for glue. The $3 for glue are completely insignificant compared to the real damage that we need to discuss, the brain damage that's going to happen from sniffing glue. So similarly, with employing a fiat standard, the damage is not the fact that, we need to pay central bankers' salary and we have a big giant building for the central bank and there's a bunch of buildings for banks. That's all like the $3.99 for the glue. It's completely irrelevant. It's a rounding error next to the brain damage that happens to society from employing this kind of monetary system, which is what we're going to be focusing on. So, of course, the first and most important cost is inflation. With a fiat monetary system, we witness the value of money decline over time. And of course, we can't use CPI to estimate that because of all the problems we've discussed with CPI. First, of course, it's collected by government, which creates inflation. So CPI numbers, of course, have a very strong incentive to be understated because government benefits from understating inflation. Secondly, I think a very important methodological point, which is that changes in prices bring about changes in the composition of the basket of goods. And so the numbers are understated. In other words, when you're calculating CPI, you're looking at what people are consuming, but what people are consuming is a function of prices. So people obviously move towards consuming cheaper things when the prices of other expensive things go up. And so it looks like the average basket of goods is staying constant in price because that's what they can afford, whereas the prices of things go up further. And the third problem is that productivity increases bring the prices down. So the CPI is again for another reason, it is an understated measure of inflation. So productivity is constantly making everything cheaper. Laptops are cheaper, TVs are cheaper, cars are cheaper. In real terms, they continue to get cheaper over time because we make more of them and we get better at making them, and the machines that we have for them become more advanced. So every year we have better computers, better cameras, better TVs, better electronics, and cheaper electronics. And so the CPI reflects that. The reason that inflation appears low is because the value of your laptop is declining in time, because the memory of your laptop and the speed of your laptop are going up because the technology is advancing. So I believe we can get a much better estimate of inflation from the money supply increases, because there's no need for the money supply to increase at all. And without money supply increases, prices would drop and quality of life would improve. So all money supply increase is just redistribution. It's unnecessary. There's no need for the money supply to increase. And all of the increase in it is just unnecessary redistribution that's taking value away from the existing currency holders and giving it to the recipients of the new money, which really is, there's no reason for it. So we can look at money supply increase as a better measure of the increase of inflation in the fiat standard.
The Bitcoin Standard podcast is brought to you by thesafehouse.com, my independent publisher and bookshop, selling the best Bitcoin books in high-quality cloth hardcovers built to last for generations. Most books these days are pretty fiat. They're flimsy and they fall apart quickly, and I did not want that for my books, so I set up the Safe House especially to provide you with beautiful, long-lasting classic cloth hardcovers you can proudly pass down for generations. You can get copies of my 3 books, The Bitcoin Standard, The Fiat Standard, and Principles of Economics, and you can also get copies of Lynn Alden's Broken Money, Parker Lewis's Gradually Then Suddenly, and Matthew Lysiak's Fiat Food, to which I contributed a few chapters, and Mexican billionaires Ricardo Salinas Pliego's new book, The Bitcoin Enlightenment. We now offer bulk discounts so you can buy books for yourself and for the friends and family you'd like to learn about Bitcoin. Buy any 2 books for $50, any 5 books or more for $20 per book, and for more than 50 books, it's only $15 per book. Go to thesafehouse.com, the SAIF house.com, where you can get all of these books in high-quality cloth hardcovers, delivered worldwide, and get 10% off for paying with Bitcoin. The Bitcoin Standard podcast is brought to you by the Daylight computer, my favorite computer, because I love to work early in the morning, late at night, outdoors, and in the sun. But regular computer screens are terrible at these times, and they can hurt your eyes. For years, I've wanted a paper-like electronic screen I could use to write, but never found a decent one. Now, a group of Bitcoiners have finally delivered a fantastic full-function tablet with a paper-like screen that's easy on your eyes and great for outdoor use. I have been using the Daylight computer for more than a year now, and I cannot recommend it enough. And it's led me to invest in the company. Now, they've introduced a new Daylight computer for kids. A calm computer to help your kids focus with no distractions, no mature content, no ads, no tracking, no social media, and no junk content. Daylight is the real low-time preference computer for you and your children. Check out my interview with founder Anjan Katta in episode 249 and go to daylightcomputer.com to see this amazing machine, or kids.daylightcomputer.com to see the kids version, and use code SAFE to get 10% off your purchase. With fiat money constantly debasing, preserving your wealth isn't an option or luxury. It's a financial and moral imperative. If you're familiar with my work, you know the only financial advice I ever give is to buy and hold Bitcoin for the long term. This has never failed anyone. If you want to buy Bitcoin, I strongly recommend using Swan, a group of hardcore Bitcoiners laser focused on making Bitcoin easily accessible. While most scramble to react to each new crisis, Swan private clients are already positioned in the only monetary asset with absolute scarcity, Bitcoin. Swan Private partners with families and institutions who share a principled conviction in Bitcoin as the foundation for multi-generational wealth. With concierge service, deep expertise, and uncompromising security, the Swan team helps clients exit the crumbling fiat system and secure their future in sound money. Today, Swan Private serves more than 5,000 high net worth clients who have purchased more than $4.5 billion of Bitcoin and put it into cold storage. If you're ready to move beyond the false promises of fiat, start your long-term Bitcoin strategy at swan.com/safe, SAIF.
So the average annual supply inflation for the major national currencies between 1965 and 2020, we see it's 6.67% for Switzerland, 7.4% for the US, 7.8% for the EU, 9.76% for Japan, 10.8% for United Kingdom, 20.3% for China. The simple average for all of the world's currencies is 30.1%. That's just a simple average. So 30.1% increase in money per year. If we just take the simple average. But if we're going to take the actual weighted average by growth weighted by the size of the currency, you get an annual growth for supply from fiat money overall. You know, in the 30% average, you would get that number if you calculated each currency as being equal to the other. So in this situation, you know, the numerical average would have 500% increase, say, in Venezuela, plus 10% increase in the US. Those would average for 255 as an average between the two. But if you wanted to take a better measure for increase of fiat overall for the world, you would weigh for the size. And so you would give the US average a much higher percentage, because there's a much bigger amount of US dollars than Venezuelan bolivars out there. And so a lot more fiat users are experiencing the supply increase rate of the US dollar rather than the Venezuelan bolivar. So if we did it that way, the number is much better than 30%. It's still bad though, it's 14%. So the global average annual inflation is 14%. The average fiat currency around the world increases in supply by around 14%. That includes, as we said earlier, 6-7% in the best cases in the US, EU, and Switzerland. But it also includes, you know, 300 and 400% in the Venezuelas and Lebanons and Zimbabwe's and all kinds of other horrific hyperinflationary episodes. So 14% per year increase in the money supply, which is enormous. At current, to get a perspective of it in current terms, in say 2020 money, in 2019 money, total global money supply in 2019 was $95 trillion, and total global wealth was around $360 trillion. So fiat money is 26% of global wealth. So a quarter of global wealth is in fiat money, and it is devaluing at a pace of 13.72% or 14% on average, which means humanity loses 3% of its total wealth per year to inflation. So if inflation is about a quarter of global wealth, and every year we lose 14% of the value of fiat money thanks to inflation, then humanity is losing 3.6% of its total wealth per year to inflation. And at 2019 money, this is about $15 trillion a year, just inflation. So we're losing, imagine it's a total bill globally of about $15 trillion a year. People are paying $15 trillion a year in order to run the fiat monetary system. So again, that's why we can say that the cost of running the banks on the fiat monetary system and the central banks is a rounding error that approximates to zero, because the cost of running fiat is around $15 trillion a year just in inflation. Just inflation. But wait, there's more. Of course, inflation is not just a problem because it is, because it destroys wealth. It's also extremely, extremely regressive in its redistribution, because inflation increases the nominal and real value of hard assets. So hard assets become more desirable as a store of value with inflation. So, the inflation increases the supply of money, the value of money goes down. And in nominal terms, hard assets go up, real estate goes up, stocks go up, companies' valuations go up. So hard assets valuations go up in nominal terms because the value of the currency is declining, but it also goes up in real terms because people want to use those things as a store of value. When they see that their money is losing value, they start buying more stocks and real estate and other things. So the value of those things increases in real terms as well. So people who hold those things benefit, whereas people who hold cash predominantly are hurt. So cash loses value, but rich people own hard assets and poor people own cash. And so the result is poor people get poorer and rich people get richer. Even if rich people hold more cash than even if rich people hold more cash than poor people, this should say here, they hold a far smaller chunk of their wealth in cash. So there's no escaping the conclusion that mechanically the fiat system is an extremely efficient protocol for impoverishing the poorest 90% of the world's population to benefit the richest people in the world. Really, the richest 10% of the world, basically the richest people in the richest countries in the world, particularly in the US and Europe, they're the ones who have access to borrowing at very low interest rates, and they're the ones that are able to borrow at interest rates that allow them to benefit from inflation, so that they're the currency that they're borrowing in is going down in value, so they need to pay at a lower rate every year. They benefit from this, but everybody else is predominantly losing because, poor people in rich countries hold predominantly cash and checking accounts, and they are losing value. And poor people all over the world are losing value because they also either, hold cash, physical cash. The poorest people in the world, that's all that they have, a little bit of physical cash, and it's all getting devalued very quickly. So all of those people, basically the vast majority of people in the world, are getting robbed by inflation, and maybe the richest 10% are the ones that are able to protect themselves effectively in the long run by borrowing. And even among those 10%, even the richest people, they're still extremely insecure because they miss a couple of paychecks, and then the whole thing comes crumbling down because the whole thing falls apart then. So the first problem, as I've said, is inflation. The second problem is inequality, and somehow none of the people constantly crying about inequality mention this. It might have something to do with the fact that they benefit from fiat money. Indeed, approximately all academics, politicians, bureaucrats, and corporate virtue signalers benefit from fiat inflation. That all of these organizations get paid from fiat inflation. So clearly they're not going to pinpoint fiat inflation as the cause of the problem of inequality, which they make their living talking about. So it's very curious. A lot of people always talk about inequality, never mentioning inflation. And then the third way in which we pay for the fiat standard is the economic distortions that it causes. This is, of course, a centrally planned economic and monetary system, which means that there's an enormous amount of economic distortions that results from it. So we try and run through some of these most important distortions here. It raises our time preference, as discussed in Chapter 7. It reduces our ability to save. It reduces our ability to save for the future, and reduces our ability to provide for a future. So it reduces our certainty in the future, which is what raises our time preference. And it also likely has had an enormous impact on technological advancement, capital accumulation, and peace, for all of the reasons discussed in terms of time preference and technological advancement and capital accumulation in the earlier chapters. Another major one is business cycles, which we discussed in the Bitcoin Standard. You can also take the Bitcoin Standard course on my website. You can also take it on the you can also read the book. We discussed the business cycle and how fiat money brings that about. And as an example, some economists estimate that the 2008 financial crisis cost around $21 trillion. Business cycles and fiat money also destroy capital by making it appear profitable to consume capital. So if inflation is 10%, a project that offers a nominal return of 5% is profitable, but it destroys society's resources. Simply destroying resources slower than inflation becomes profitable under the fiat standard. So this is, I think, a point that is understated. Not a lot of people mention this when thinking about the problems of fiat. Because fiat is destroying money's value, let's say at 10%, so the expected value of your money to go down 10%, it becomes prudent for you to invest in a project that returns a 5% nominal return, even though that project effectively has a 5% negative return. So a project that consumes capital, but consumes capital less than inflation, is better than inflation, so therefore people will invest in that. And so with an inflationary monetary system, society will consume capital that it wouldn't otherwise consume. It would invest in businesses that destroy capital that they would otherwise not invest in. Otherwise, people would just hold on to their money, and their money would hold on to its value. But because the money is not holding on to its value, anything that is destructive but less destructive than inflation becomes profitable. And so a lot of the society's capital starts going towards essentially doomed and unsustainable and capital consuming business ideas, because they are less capital consuming and less doomed and less destructive than inflation, which is insane, but that's where we are right now. So that's another way in which inflation happens, and inflation costs us. So effectively, without inflation, only projects that yield a positive real return get financed. So all the capital and resources go towards sustainable and productive business ideas, as judged by people paying for them. Consumption goods that degrade better than money become good investments. People start consuming and buying consumer goods that lose value less than money when they don't really necessarily need those goods. And so people buy more stuff than they need because they need their stuff to store value. People start buying more things because they need those things as a way to hold on value. And these things, of course, degrade in quality because they don't have to be very good to hold on to value better than money anymore. When money is hard, people can just hold on to money and expect it to appreciate. So if they were going to sell some of their money in order to buy something, if they wanted to buy something to actually use, they would need something that would likely hold on to its value better than that money does over time. That's why they demand quality. But when the money is losing value, then something that holds on to its value better than money ends up looking very good. And so people buy shoddy things because as long as you're performing better than money, it's better. It's better to hold it. So people buy all kinds of useless things that they don't need.
This podcast is also brought to you by the Bitcoin Way, your professional Bitcoin IT team offering you personalized, secure, and comprehensive solutions for every step along your Bitcoin journey. The Bitcoin Way offer live concierge service to guide you with your Bitcoin cold storage, running your node, privacy best practices, inheritance planning, corporate strategy, and multi-sig solutions. They don't touch your coins, they guide you through the process of acquiring your coins and securing them. If you'd like to make your setup safer and more reliable, book a consult with them and see what they have to suggest. If you want to give someone the gift of Bitcoin, get them this professional service that will ensure they start off knowing exactly how to manage their coins and not lose them. Go to thebitcoinway.com and start Bitcoining more confidently.
Global partial barter is another major problem of the fiat monetary system. The whole world is running on a barter system, basically. We effectively lost the technology of money and reverted to partial barter because everybody trades across national borders. Everybody, even if you don't trade yourself, the things that you buy in your supermarket come from across the border, and the things that were required in order to make your things, whatever your things are, even if you think, say you live in America and you think, let's say I buy only American, you can't buy only American even if you think you can. All of the American stuff is made abroad. Global supply chains are completely globalized at this point, and that's a great thing. It's a good thing, and it makes our ability to provide goods much more reliable. But the problem with that, and the reason people have a problem with it, the reason people think of this globalization thing as a bad thing, is because it is run on a decrepit monetary system that is unfortunately dysfunctional and incapable of handling this. We have a global monetary system that is effectively a way of handling barter across borders, and everybody needs to be a macroeconomist, a foreign exchange expert. You need to follow geopolitics, you need to follow global monetary policy, you need to follow everything happening, wars and domestic politics in Japan, and what's going to happen in the AU elections, and all of that just to run a normal, regular business anywhere in the world. It's an enormous loss of efficiency that is truly incalculable. And this is for the economic distortions, but then of course there's the distortion of just having all these crazy governments having so much power and money to affect life. So for instance, fiat food, fiat energy are two examples of the kind of things, the costs that fiat inflicts upon us. It costs an incalculable cost to life and death, life and wealth. And then 5, I think perhaps the most important cost of the fiat standard is the human cost of conflict. And I summarize this here, whereas gold's monetary role was guaranteed by its physical and chemical properties, and verification of its authenticity is possible, fiat's monetary role is entirely predicated on the authority of the issuing central bank and the government. By establishing a monopoly on the issuance and clearance of monetary tokens, fiat converts all underlying monetary assets into virtual tokens arbitrarily assigned or removed by the central fiat note. Any transaction can be reversed and any balance can be confiscated. Enormous amounts of these tokens can be conjured out of thin air into any balance by pure fiat. All value and truth in the banking system can be decided politically. This is how it functions in the fiat system. So basically, fiat makes all domestic and international politics an extremely high-stakes game because the price is virtual control over all economic value, domestically or globally. Further, and as discussed in Chapter 8 of the Bitcoin Standard, The ability of government to draw on the entire wealth of its population makes it more likely to engage in military conflict and more likely to prolong such conflict, as the cost can be easily placed on the population. Under the gold standard, governments fought until they ran out of gold and could no longer tax the population. But with fiat, governments can fight until they have appropriated all the value held by their citizens' money. That's why Ron Paul used to say, "It's no coincidence that the century of central banking was the century of total war." 169 million people were killed by governments in the last century. Fiat's proof of work system, the way that fiat functions, is that it relies on violence and the use of physical power to subjugate opponents in the case of disagreement. This is really how it functions. There's no right and wrong in fiat. There's only might. Any person can get any balance of fiat based on what the people who run the fiat system say. There's no honest accounting going on. There's no physical stuff that needs to be created. There's no gold to worry about. It's all made up, basically. It's all made up scores. So fiat is all about might makes right. It rewards might with the biggest prize of them all, the accounting system for all of society, increasingly rewarding the powerful and incentivizing humans to engage in power contests rather than economic production. The benefit of running a payment system that allows you to mint money is extremely high. People will spend resources they value close to the benefit to capture it. Fiat makes violence and power the method for incurring the cost. It takes an enormous human toll, almost entirely borne by people who stand to gain nothing from any authority capturing the printing press. This is the horrific thing about it. People are fighting over who gets to control printing press. And the result is, wars all over the world that are paid for people, by people who will never even get to control the printing press. So the total cost of fiat is about $15 trillion per year in current terms, or around 3.5% of world wealth on average over the last 60 years. It taxes the poor to subsidize the rich, a lot of economic distortion, a lot of government distortions, tens of millions of deaths. That's what we can estimate as the total cost of fiat. And then the benefit, it saves us a maximum of 0.05% of world wealth, something like that, in order to move, the money that we would have spent on moving gold around. So in order to save a maximum of 0.05% of world wealth on moving gold around, we are destroying civilization by turning everyone into a debt slave and giving infinite resources to government. This is kind of, I think, the cost-benefit analysis summary of the fiat standard, that we save a maximum of 0.05% on moving gold around, 0.05% of our wealth on moving gold around, and we effectively destroy the process of human civilization. We turn everyone into a debt slave, and we give authoritarian governments and sociopaths infinite resources to manage and control and kill and enlist and do all kinds of horrible things to us. I think that's a summary of the fiat standard, basically.